Preparing for a AB InBev FP&A Analyst interview, you've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does FP&A contribute to a company like AB InBev? FP&A turns business activity into forward-looking financial insight. At AB InBev, I would connect volume, pricing, mix, brand investment, production costs, and cash generation to the company's strategic priorities. My role would include building forecasts, explaining actual versus planned performance, challenging assumptions, and highlighting actions rather than merely reporting numbers. Strong FP&A also creates alignment across commercial and operational teams, so leaders understand both the financial result and the business decisions needed to improve it. While answering, focus on connecting financial analysis with commercial decisions, translating strategy into budgets and forecasts, explaining performance variances, supporting resource allocation, and partnering with sales, marketing, supply chain, and senior management. Question 2. How would you build an annual budget for an AB InBev business unit? I would begin with strategic priorities and a clean baseline of historical performance. Then I would develop assumptions for volume, pricing, mix, promotional spending, raw materials, logistics, headcount, capital expenditure, and foreign exchange. I would validate those assumptions with commercial and operational owners, build monthly phasing, and run upside and downside scenarios. Finally, I would challenge the plan with management, document key risks, and establish clear owners for each budget line and performance commitment. Make sure to cover the planning calendar, historical performance, volume and price assumptions, brand and trade investment, cost drivers, cross-functional input, scenario analysis, management challenge, and final ownership of the numbers. Question 3. How would you explain an unfavorable variance in revenue? I would decompose revenue into volume, price, mix, promotional effects, geographic performance, and foreign exchange, rather than labeling the results simply as weak sales. For example, revenue could miss plan because premium volume declined while lower-priced products grew. I would quantify each bridge, compare the outcome with market and competitor trends, and speak with commercial teams to identify the cause. My conclusion would distinguish temporary timing from structural weakness and recommend targeted actions. In your answer, talk about decomposing revenue into volume, price, mix, promotions, geography, and foreign exchange, quantifying each driver, identifying controllable causes, and recommending specific corrective actions. Question 4. What is the difference between a budget, forecast, and outlook? A budget is the formally approved financial plan and performance target for a defined period. A forecast is an updated estimate of what the business now expects, incorporating actual results and new information. An outlook is often a management view of the likely result, including key risks and opportunities, even when it is less formal. In practice, I would compare actuals with budget, refresh the forecast, and explain why expectations changed. Be sure to mention that a budget is an approved target, a forecast is an updated estimate based on current information, and an outlook communicates expected performance, risks, and opportunities during the year. Question 5. How would you forecast beer volume for AB InBev? I would start with historical volume by brand, pack, channel, customer, and market, then identify seasonality and recent run rate trends. I would layer in distribution gains or losses, planned promotions, pricing changes, consumer behavior, market growth, major events, and weather-sensitive demand. I would compare the commercial team's assumptions with external indicators and create base, upside, and downside cases. That approach makes the forecast transparent and helps management understand the main volume risks. Focus on historical run rates, seasonality, brand and channel trends, customer data, market share, promotions, pricing, weather events, distribution changes, management assumptions, and scenario ranges rather than relying on one growth percentage. Question 6. How would you analyze revenue growth and distinguish price from volume and mix? I would build a revenue bridge separating volume, pricing, mix, promotions, and currency. A business can report revenue growth while volumes decline if price increases or premium products offset weaker mainstream sales. I would calculate each contribution on a comparable basis, review brand and channel detail, and separate reported from constant currency performance. I would then test the bridge against commercial data and explain whether growth is healthy, promotion-driven, or potentially vulnerable to consumer downtrading. Make sure to cover the revenue bridge, comparable period basis, constant currency analysis, price realization, volume growth, premiumization, product mix, customer mix, promotional impacts, and the importance of validating results with operational data. Question 7. What KPIs would you monitor in an AB InBev FP&A role? I would monitor volume, net revenue, revenue per hectoliter, price and mix, gross margin, EBITDA, market share, marketing and trade investment, working capital, capital expenditure, and operating cash flow. I would also track forecast accuracy and the bridge between reported performance and underlying performance. The right dashboard should combine financial and operational indicators. For example, weaker margin may be explained by packaging inflation, lower utilization, or an unfavorable product mix. In your answer, include volume, net revenue, revenue per hectoliter, gross margin, EBITDA, market share, brand investment, working capital, cash flow, forecast accuracy, and operational metrics linked to the company's value drivers. Question 8. How would you prepare a monthly management performance review? I would begin by validating actuals, mappings, eliminations, and the reporting calendar. Next, I would prepare concise bridges for volume, revenue, gross profit, EBITDA, cash flow, and major cost categories, separating timing from underlying performance. I would meet business owners to confirm causes and agree actions, then highlight the implications for the latest forecast. The final pack should be decision-oriented: what happened, why it happened, what changes next, and who owns the response. Focus on data quality, actual versus plan analysis, concise variance bridges, key messages, forward-looking implications, business owner commentary, action tracking, and tailoring the presentation to senior management decisions. Question 9. How would you analyze gross margin pressure at AB InBev? I would bridge gross margin from the prior period or plan using price, mix, raw materials, packaging, freight, labor, manufacturing efficiency, currency, and volume leverage. I would distinguish input cost inflation from operational underperformance and identify whether pricing or premiumization offsets the pressure. I would also review promotional intensity and hedging impacts. Finally, I would model corrective actions such as price increases, sourcing changes, productivity initiatives, or mix improvement, and quantify their timing and risk. Be sure to mention price, mix, raw materials, packaging, logistics, manufacturing efficiency, currency, hedging, promotions, volume leverage, and whether the pressure is temporary or structural. Question 10. How would you evaluate a proposed marketing or trade investment? I would evaluate the investment against its objective, whether that is incremental volume, market share, premium brand growth, or customer retention. I would estimate incremental revenue and contribution margin, then deduct promotional costs, marketing spend, execution costs, and potential cannibalization. I would compare the result with a no-investment scenario and test sensitivities around volume uplift and timing. After approval, I would define KPIs and review actual returns, not just activity or campaign reach. In your answer, cover strategic objectives, incremental volume, price and mix, contribution margin, cannibalization, customer terms, brand equity, payback, sensitivity analysis, and post-investment measurement. Question 11. How would you incorporate foreign exchange into an FP&A forecast? I would first identify which revenues, costs, assets, and liabilities are exposed to transaction or translation risk. I would apply approved budget or forecast exchange rates consistently, while keeping the underlying local currency operating assumptions visible. I would separately quantify the reported impact of currency and any hedge benefit or cost. For management, I would present both reported and constant currency performance, then show sensitivity to key exchange rate movements so decisions are not distorted by translation effects. Focus on transaction and translation exposure, budget rates, local currency operating assumptions, sensitivity analysis, hedging effects, constant currency reporting, and clearly separating operational performance from currency movements. Question 12. Tell me about a time you improved a forecasting or reporting process. In a previous project, monthly reporting required repeated manual consolidation across several spreadsheets, creating delays and inconsistent definitions. I mapped the process, standardized data inputs, built validation checks, and automated recurring calculations while keeping review controls in place. The reporting cycle became faster, and stakeholders received a clearer variance analysis earlier each month. More importantly, the team spent less time assembling data and more time discussing drivers, risks, and corrective actions with business partners. Make sure to use a clear situation task action result structure, quantify the improvement, explain stakeholder collaboration, mention controls or automation, and show how the change improved speed, accuracy, transparency, or decision-making. Question 13. How would you handle conflicting assumptions from sales and supply chain? I would first clarify whether the disagreement concerns demand, timing, production capacity, inventory, or service levels. Then I would compare both assumptions with historical performance, customer commitments, market data, and operational constraints. Rather than forcing one unsupported number, I would build a base case and explicit upside and downside scenarios, showing the financial impact of each. I would document the rationale, agree monitoring indicators, and escalate the unresolved judgment transparently to the appropriate decision maker. In your answer, discuss listening to both functions, defining the exact assumption, using independent data, reconciling capacity with demand, documenting scenarios, escalating transparently, and preserving accountability rather than forcing consensus. Question 14. How would you assess working capital performance in a beverage business? I would analyze working capital through inventory days, receivable days, payable days, and the cash conversion cycle, using both monthly trends and seasonal patterns. For AB InBev, I would examine finished goods, packaging materials, customer terms, collections, production cycles, and slow-moving or obsolete inventory. I would separate operational drivers from timing and currency effects. Recommendations might include better demand planning, collections discipline, supplier term management, or inventory reduction while protecting service levels. Be sure to cover inventory, receivables, payables, seasonality, production cycles, customer terms, slow-moving stock, cash conversion, service levels, and the trade-off between liquidity improvement and commercial or operational risk. Question 15. Why do you want to join AB InBev as an FP&A analyst? I want to join AB InBev because it combines globally recognized brands with complex commercial, manufacturing, and supply chain decisions. That environment would let me apply financial analysis to visible business outcomes, from improving mix and pricing to managing costs and cash. I am particularly attracted to a performance-oriented culture where analysts are expected to take ownership and challenge assumptions. I would bring strong modeling, communication, and problem-solving skills while developing as a commercially minded finance partner. Focus on AB InBev's global scale, strong brands, commercial and operational complexity, performance-oriented culture, opportunities for ownership, analytical development, and how your skills can support profitable growth and disciplined execution. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.